Everyone will get started in 5 minutes. Stand by. Hello, everyone. There's the NASDAQ. I want to welcome our viewers from investing.com. To have a good day. As you can see here on the 2-hour time frame. Hello, nice to meet you, Kay, and everyone else. Who else is here? We have our regular stalwarts, Brock and Ren. Samadan, nice to meet you. So we're always starting at the top of the hour here, everyone. Okay, same time every day for over 3 years right now. So I just want to point out here that all the way up, we kept confirming highs even as recent as last week on multiple time frames. As you can see here too, see that this was confirmed. This marginal new high was not confirmed, and we're under 70 here. Steve Volge has shown the dramatic difference between, and stick around for Steve, I think he'll show the chart again, the dramatic differential between the NASDAQ and the S&P, that the last time it was like this, where we had valuations exceeding in NASDAQ, mainly, FANGs and the big leaders, Microsoft, over the S&P 500 was all the way back to where, a lot of you people were in diapers. Uh, Well, maybe not. It was in 2000, so 20 years ago. So probably hard to remember that. A lot of people that are in the markets now have been trading, for less time than 20 years ago. So just looking at history, you just have to see that we are so stretched on the valuations in Nasdaq compared to the S&P 500, and the S&P 500 is not junk. Ziggy's got his depends on now. And, I did as well when I shorted gold early. So, uh, shorted it up against this line, and we're still in the middle of a throwover. Silver way outperforming gold. Finally, I think challenged, yep, finally got to these highs all the way back to March. Many markets have exceeded their March highs. Hello, Monica. But taking a shot here at NASDAQ, um, even on the daily, we had a confirmed high here. And look at this confluence here. So I know we're way above this. This was the previous all-time high in NASDAQ at this 9730 level. And I know, we're 1,000 points above this. So, you could say that we're still in breakout territory and we're still going higher. And, it is counter trend, and I do a lot of counter trend stuff based on RSI. Doesn't work all the time. Um, but what does? And what you do is you probe and protect. Even in silver before the breakout that we had today, there were actually, there was a decent trade on turnaround Tuesday. Doesn't look like much now, but back here we had this, right? And that was, oh, excuse me, that was back here. So we had 40 cents from here to here before the breakout over 1840. So, look at this RSI reading in silver. It's just so huge. This last high, though, right here on this candle, did not confirm. And then on gold, the conservative thing to do, you see, we have a confirmed high here. A lot of people looking for 1820. We could still get here, but this is really your line in the sand for being long. Gold would be back under 1800. Yeah, so it's good if you know how to use it, just like anything else. So, it's good if you know how to use it. And oil, with what the S&Ps has done, look how long we've been sideways here. To me, it still looks like there's potential for it to roll over. We still haven't taken out this high, is still standing from June 23rd, which was the solstice. Copper's at January highs. I know a lot of people are salivating, talking about shorting copper because they're bearish on the economy. I don't have copper up, or I'd take a look at it, but I know I talked to a lot of traders at them, and uh, you know they wanted to short it all the way up, just like people wanted to short the S&P since the COVID crash all the way up. Tried it at 50%, at 61%. Well, we got above 78%, but never quite got to 88.6. So we'll see. I know Steve thinks we could still get there, and it's possible. I mean, we're only about uh, 80 handles away from that. To me, it looks like really your first line in the sand is this level right here at 3,100. 3,100 is going to be big. If you're long stocks, you don't want to see a trade under there. I don't know about the rest of the team. You're waiting for the third drive, Simon. You could be right. So this is what Simon's talking about. Here's one. Here's two. Let me lower the time frame. Okay, so he's thinking this is one and this is two, and we're gonna get one more high. Sure has tried 41 quite a bit, so we'll see. Um, if we start trading under 40, 50, and $40, forget about the third drive. Simon, just to let you know, I've been trading that technique for a while. Sometimes it only takes two, and sometimes it takes 1 million drives. So, you know, you still, even though you have that formation, you still have to protect yourself. And when I look at the currencies right here, I mean, you can't say anything good about the dollar, right? I mean, this was kind of a classic breakdown back test, and here we are at new lows. I have a hard time wanting to just short the dollar down here, but the dollar bears are looking for this. Yes, Jay. And I did not add, so I'm down $10 on it. Yeah. Okay. So this is what a lot of traders are looking for in dollars that are very bearish, but then bullish after this. See these lines here? All right, 92. All right, and then when you look at the 92 level, um, it still could be viewed as a correction from this low to up here, down here at 92. So we'll see what happens here. I think a lot of people will capitulate here. Yeah, it could. It could. Yeah. But sometimes they don't always. Jay is saying if the dollar drops that far, gold will be going a lot higher. So could be, there were time periods in this gold bull market when the dollar was actually strong and you'd have a stronger dollar because of risk off and people still flowing into gold because of that. So that's an old correlation that is like a light switch, like most correlations nowadays, where you could turn it on, turn it off. But logic would say a weaker dollar, higher commodity prices. I agree with you. So we'll see. All I could say is in the gold, congratulations to the bulls, but be careful if we're trading back under this 1800 level, which is only $8 away. Okay. And I really want to make an offer. I don't know if Joe Perry's around here, but we do this on Thursdays for you to consider becoming part of our community. And we have a very strong team here. In fact, what's interesting about the team is before I came here, I was interviewing a lot of the members of the team on FX Street. So here's our team. You can see Blake. Blake trades from one of the more elite funds out there. Gelos and Greg has won awards on FX Street. It's an advantage to me being here with these guys and knowing what they're thinking. And I've been doing this a long time, and I consider being part of this team an edge because it's intelligence gathering for me. All right. So we also have a members community that is going on right now and does most of the day where you could ask Blake questions and Steve questions during the day, and we have many professionals in there that this is how they make their living. It's not like a trip to the casino to play the slot machines. It's serious business here. So I'll see if I could talk to Joe about some type of special today for our viewers at investing.com, as well as people who are here every day. I think Joe might be on vacation though, but it would only be for a semi-annual or annual. So if you're interested, just drop something in the chat, and
Yeah,
someone from our company will get a hold of you.
I was gonna say I think Joe's in the mountains.
Yeah.
They're they being he's in New Jersey and he's on
Oh,
he works in the city and stuff.
yeah.
I think it's being on lockdown all spring, they taking advantage of getting out and being in the
Yeah.
wilderness. So I think
On,
that's where
on Golden Pound,
yeah, exactly. There you
like
go.
that,
But
right?
on Colton Pond. But on our website, there's a little chat box in the lower right hand corner that anybody can access and just say, we have a couple of staff members that are there that can address any if you're like, hey, I'd like to take advantage of special pricing offer. I'm sure somebody there is going to be able to hook you up. So
How much off semi-annual or annual just for today, Blake?
I don't know because I
All
don't
right.
know what discounts we are offering, but what's the normal? What's the going rate, Dale? Because I don't know.
I think 15, 20% on semi-annual and
Oh,
annual.
okay. All right.
Yeah.
Well, I'll give the go for the staff to work with any new clients as being as
Okay.
generous as possible, but
Thank you,
not
buddy.
undercutting any of our deals that we do annually, because our
Right.
annual deals, those are big deals that we like to, they're kind of sacred, if you will, a couple times a year. So if you
Yeah.
miss out, you got to wait. So like to keep it that way, you know what I mean?
Okay.
But
Yeah.
if people are super excited about being involved, then we'd like to have you. So our staff will be able to help you there.
What
So
are you
how's it
doing
going
with
there?
these
Huh?
currencies, buddy? I mean, I can't short the dollar down here. I can't buy it.
That's the kind of the argument. I say argument. That's the kind of issue I have right now. And I was in the chat room a little bit earlier today. Well, I've been in there all morning since I got up at 3. But what I was telling the guys and gals in the chat room earlier, it's like, I was going to sell the euro up at 50, but I was coming on here, and so I didn't, but I did something else instead. But anyway, I told him earlier when we were down in the 30s, I'm like, okay, I'm going to sell it when we get up to the 50s, because people overnight, some of the traders overnight, were probably long here in the 50s and 60s thinking that we're going to get a breakout. And then now that it's kind of showing failure intraday, you take a rally back towards those levels to sell into. Um, but the point, the point I'm trying to make right as of now is that uh, uh, we are probably range bound. We might be in summer range, and we have to keep our expectations kind of tempered, because you know I, I I'm sitting here looking at the euro dollar and realizing that, hey, I bought it earlier this week. I bought it at 113.20. I want to say it was Monday. I bought it at 113.20. I sold it at like 112.97 or something like that. I bought it like here thinking, oh, we're going to be breaking out. Then I sold it after this bounce, something like that. And when we bounce back here, I sold it, uh, and I took a relatively small loss. And I'm like, man, I think a lot of traders are getting whipped around in the euro dollar right now because we're seeing a lot of false breakouts, above this 113.50. I thought this would be kind of a big deal because, if you recall, let me just take this little blue line right here, right? Since this is June 12th, June 16th, June 23rd, this week, July 6th, look at all the failures at 113.50. Then you get a break above the 113.50 last night. Everybody goes, woohoo, break above 113.50. what does that end up being? Ends up being a, false breakout. So we might really just, going into this summer, we might be in a 114 to 111.50 range. And keep in mind that this would not be uncommon behavior for the summer, to have this, just kind of bouncing around. So that I think is possible. So just be really careful. There's a lot of these Eurogroup meetings that are, happening right now. And there's a lot of talk. I got a couple emails from some, it was passed around amongst the community, some of the, bank trader community. Some of the dealers had been sending some of these reports from different journalists and people that have been covering these Eurogroup meetings about, the positive feelings they have regarding, some, they think the negotiations are going well, but I mean, I guess the proof is in the pudding, and maybe some positive news might be the catalyst that drives the euro higher. And I think some of the reasons why you're seeing the push up into the upper end of the resistance levels is because you're probably getting that kind of that chatter amongst the dealer community from the guys that are sitting on the desks at whether it's Goldman or Citi, they're starting to hear murmurings of positivity. But I guess, like I said, the proof is in the pudding, and I frankly, I just need to see a nice daily close above 114, and I at that point I'd be looking to probably play it on the long side and just only play it on the long side on the euro. As of right now, what we're seeing, I'm more open to being on both sides of the market. I don't mind selling the euro up here around the 113.50 level if I can get it a little bit later, because I didn't take advantage of it. When I was at 113.47. So that's kind of how I'm dealing with the euro. Also, let's talk about the cable for a bit. The cables
next week, right, Blake?
Yes, the ECB. Yeah, and a lot of people really want to be long the euro going into the meeting, and is that I don't know if that's the right trade. I need price to actually tell me that that's the right trade, and right now it's not. And one of the and this is going to tie into that too, Dale. You got the cable moving right into a downtrend line, pretty key downtrend line that's been in there since the beginning of this year, right?
Yeah.
78% retracement comes in at 127 roughly. So being long the cable right now, I don't know if it makes a lot of sense. Okay. We're pushing into resistance, and it's like, okay, well, if I wasn't buying it at 125 a week ago, should I be paying up at 127 right now? Knowing what I know about, this is the summer, the euro's not really going anywhere. Is this really the time I want to be on the long side? I don't know if I necessarily want to be short right at 127. I might try to pick it off here and take a, short with a really tight stop, and step away from it. Maybe I might want to do that, but I have to see it first. I mean, I have to get a really good price to be on the short side of the cable up here. I mean, I'd want to be short at like 127 or right below it, and then just put in a tight 30 pip stop, and that would be my trade. But we might not even get up there, because how many people are trying to sell the cable as we make that move? Look at the horizontal resistance here, 126.90. That's the 78% retracement. We all know that the trend line's somewhere around here. So the way this works is you have people like me, like I'm just using me as an example. I got it. Hold on really quick, Dale. Oh, never mind. I'm sorry.
Go ahead, buddy.
Oh, no, sorry. I thought they were calling on
okay.
People in my office were looking for somebody else.
Multitasking.
Yeah. But like, let's say I have my orders here, and then other people have their orders here, and other people have their orders, they're trying to undercut those people. They have their orders here. Then these people are trying to undercut these people, so they got their orders here. So you can see all these you're lined up with a multitude of orders. Mine are here, then somebody's trying to undercut me, then somebody's trying to undercut them undercutting me, then so you start to work into a wall of selling as you make your way up there. And is there enough buying to take us right up into that resistance? I don't know. But for me to step in front of the cable after this good of a move, and I'd want to get as good as price as possible. So I might try to stick a sell out there, and see if I can get triggered overnight at some point. That's an idea. Another thing that I have to bring up, the Kiwi, this friggin' thing's so strong.
Huh?
It's so strong. But I was thinking last night that we were going to break out. I was like pretty set. Now I set up a bunch of alarms. I'm like, okay, this thing's going to break above 66 cents. They're going to start pushing the stops, in Asia. And that can still happen. It could happen like actually right now as we're speaking. But we've really been sitting, just we can say roughly a 30 pip trading range for the last 12 hours, just sitting here. And then we've, been up here before, and I know this is a multi-year trend line. I know everybody's looking at it. So it's got kind of like a Mexican standoff. You got everybody, sitting here trying to sell it because it's resistance, not going anywhere. Everybody's trying to buy it because, they think that it's going to break resistance. It's not going anywhere. So you got this standstill right at key resistance. But with stocks continuing to go higher, it should break out, right? But it hasn't yet. And that's probably making, some people a little nervous at this point. Dollar Canadian. I got hurt in the dollar Canadian yesterday. I bought it. I got into a trade as it was above 136.10 overnight last night or yesterday. I bought a little bit more on a dip down here in the 60s, bought a little bit more in the 20s, and then just I just basically stopped myself out at, just below here. And I'm like, that was frustrating because it took all my silver profits yesterday, because I was all over this silver move as we broke out yesterday above this resistance. But that's, kind of the frustrating nature of this market right now. It's like, for me, it's been, you make a little bit here and then you lose a little bit there. And it's like, man, it's extremely frustrating. But I'm hopeful that we have a breakout looming soon, and what I guess one of the things that I continue to think about, and it's one of the things that's like constantly on my mind right now, is that stocks continue to break higher. Look, NASDAQ's at new highs right now. We're at new all-time highs right now. NASDAQ 100 as we speak. We're sitting here at new highs. Why isn't the dollar getting its ass handed to it right now? Why? And I don't have any good answers for you. I can't sit here and tell you, this is why and that's why. Because I can argue both arguments. I can tell you, there's too much dollar demand, and everybody there's this dollar um, uh, deficiency around the markets. Yet the Fed continues to blow out its balance sheet, so it's the dollar should be a lot weaker. The fact of the matter is, it's just not following through to the upside. The dollar is not following through to the downside, and that is concerning to me, especially when you have this bear flag. You're like, okay, we should, with the stock market where it's at, the dollar should be here, and it's not. And that is obviously, as I'm sitting here trying to navigate through the FX market, that's a little nerve-wracking. Now, one of the things that would get me bullish the dollar instantaneously, and then you think about, like, this is a 4-hour chart. So let's go over to the daily chart. Okay, so let's think about this. Let's say we are in a just more of a range. So the one thing that will get me excited about being dollar bull near term would be this. we break above this trend line, and then you got everybody who's a bear that automatically just found out that they're wrong. Like for sure, they've confirmed that they're wrong because now you have a more of a triangle pattern probably developing. So above 97, and you can't be a dollar bear anymore. Just
Like
you
it.
can't, right?
Nice look,
So,
man.
well, I mean, I'm trying to
Yeah.
put it in perspective on where we are, because I am again, I sit here and I look at the dollar. I have expected the dollar to just I've expected the euro to run to 117, the cable back up to 130, and I'm not saying it can't happen.
Yeah.
Sure. I mean, again, if stocks continue to blast higher, it's like eventually the dam will break, I would think.
Well, when you drive, you look down the road, right, Blake?
What?
When you're driving, you're looking down the road, not right in front of you. So
Right. Yeah,
that in the
exactly.
markets, yeah, same thing.
And here's another frustrating thing. So last night I shorted the dollar max here at 73 because I'm like, okay, equities are closing higher, stronger, so I'm gonna just go ahead and short this and then keep the pennant kind of in play and put my stops above here. Put my stops above here just in case it broke out. Obviously I didn't want to be around if it started breaking 23. I told everybody overnight that hey, I'm going to short some dollar Mexican peso at 73. It's where my average was. I told everybody in the chat room. Then I wake up. We're sitting here at 66, and so I close it out. I take a little bit of profits, and then stocks rally higher, and then all of a sudden the bottom falls out of it, and it's so frustrating. It's like I just took it off like literally an hour ago, like right here. I took my profits here, and then this happens. It's always like it's hard, man. It's hard because when the market's just not giving you what you expect at that moment, sometimes you have to be, I guess a little bit more patient than I have been. So with that being said, I'd like to bring in my colleagues. Maybe they can mention or talk a little bit more about the markets, because we have jobs report coming out, weekly unemployment claims, right, guys?
Initial jobless claims, yes.
Yep. So, and by the way, I have to point out just really quick with the S&P. So here's the S&P. This is the downtrend line in the S&P that we're nudging up against. If we're going to fail, we're going to fail here. The S&P, I mean, I'm skeptical that we're going to fail here, but I'm just saying if we're going to fail, we're going to fail here today. But we break out above 3,200, it's bullish. That's bottom line. So, Steve, we should probably pull up the calendar. Let me pull up the data flash really quick. Let's look at the unemployment claims. Let me grab this is included with Forex Analytics. Let me just grab the dollar yen price, see a better view of this. And what are we looking for this morning, Steve, for unemployment claims?
Almost 1.4 more million. And let's see what we get. I think that for those that notice and read news from companies, I think it's more than obvious what we were saying since the beginning, that the recovery is not going to be such that it's going to bring the economy back to where it was. If that was the case, initial jobless claims, which is new people that file for unemployment, would not still be printing week by week above 1 million. I mean, at the very least, if the problems were fixed, companies would not be firing so many people every week.
Yeah, right. True. All right. Well, let's see what we get. It should be out in right now. I haven't seen it. I don't see it.
It hasn't come out yet. Sometimes might be delayed.
Yeah, I don't see it even on Bloomberg.
I have live squawk on my ears. They say that we're still waiting for the data. Not our fault.
Hey, the equity markets popped.
They know something that the market isn't supposed to know yet, though, because nobody has.
Yeah, well, that doesn't surprise me with.
There it is, as expected, more or less.
Yeah. Oh, yeah. Yep. There we go. And actually, you know what? That came out before before Bloomberg. That's crazy. I was watching both. So, hey, good morning, Stelios. How are you?
Good morning. I have to admit, I was at the beach all day, all morning. So, yeah.
Well, you know what? I'm going to let you
I'll
guys
ban
talk.
this guy.
I'm going to let
this
you.
guy.
I know. I mean, he sent a picture. You should probably show everybody how beautiful it is there. Anyway, well, maybe you should, because some of us are in quarantine. So,
and we can't go to Greece. Like,
right, and we can't go to Greece. We were, matter of fact, my wife and I were looking at what the prices were to go to Greece yesterday, and there's $1,600 a ticket, which I think the last time I went, which was what, Steve? When did we meet? 5 years ago? 5 or 6 years ago?
6 years ago.
6 years ago,
7.
maybe.
6
I think
or
I
7.
paid $2,200 per person from here. I think so. Yeah. But the problem is if I went to Greece right now, I don't think they'd let me in. So
they wouldn't.
Yeah,
you know what?
That's an issue.
You can't. The Mexicans don't want us either anymore. So
no one wants
they're gonna.
No.
So they are gonna pay to build a wall.
I live in Phoenix, Arizona, and people in northern Arizona don't want me there. So
yeah.
Anyway, hey guys, I'm gonna let you take over. For those of you that are not part of Forex Analytics,
remember we have that deal going today.
Yeah, we have a deal going, and also visit our webinar sponsor, Forest Park FX. And if you want to learn how to maybe get Forex Analytics paid for through your trading, you can try the reimbursement program. You can contact the guys here on Skype or email. That's Forest Park FX, and they'll be more than happy to help you. They've been around for years. We've been working with them for years, and they work with most every broker out there. So take advantage of them. I'll let you guys take over from here. So thanks, Coach Stelios, Steve.
Welcome, buddy.
It's all yours.
Thank you, Blake.
Thank you, Blake.
Thanks, guys.
Talk to you later, mates.
So
Bye-bye.
Ziggy says he's in New York and he doesn't want us either.
No, I don't blame him.
Yeah. So,
how you doing, gentlemen?
I'm very well. How are you, Dale?
Good, buddy.
Good day.
Stuff.
Are you feeling well now?
Steve. Yeah, I'm pretty much, back to my, Meshuggah self.
Back to
If you know what it
normal.
means. Huh? Yeah.
So, markets. Obviously, we're talking yesterday. We had the red candle in indices. Will we get some follow through? Clearly, we're not getting that. So momentum is still to the upside. Let's see when we do turn lower, or what the
Nasdaq already 0.5% higher today, Stelio, for no apparent reason.
Yeah. What is going to be the trigger? We had. I was reading about COVID cases in the US. Texas had a second day in a row of record the number of deaths. I mean, it's like, I wish it was going away, but it doesn't seem to be. And this is not just the US. So I'm very skeptical about what the market is pricing in terms of how we come back to normality. I want to say normality. We also have to remember what the situation was globally before COVID. And if you remember, it was most of the major economies were turning lower. The American economy, EU, UK. So, normality, if you want to call it that, it wasn't a great situation. Let's put it that way. At least not for equities to be at all-time highs. Having said that, we know that central banks are going to be there supporting markets. Trump tweeted.
That's the only thing actually that supports markets.
Yeah. Of course, it's a huge force. I mean, I'm not.
It is.
I'm not saying it isn't. And Trump tweeted yesterday, I think, that another check is coming. This is real money going into real people's real pockets. So
never got mine.
This will have an effect. You didn't.
Yeah, I mean, everyone I know got their.
That is really funny because I've told you the story before. One of my best friends and his sister got their checks, and let me tell you, they're Greeks. The only thing is that their father used to work as a doctor and teach at a university there for
and
years.
they got stimulus checks.
So
God, is this
once his
mismanaged?
wife, once his wife was to give birth, he took her both times in New York because one of his best friends was a gynecologist there. So she gave birth there. Both the kids, due to that, have double nationality, but they've never worked in the U.S. They've never contributed any taxes, and they both got their checks.
And you know what? For some people here, guys, with the unemployment getting an extra 2,400 a month, it's actually a boon for some people, this pandemic. Not that they're, they can't do a lot of the things they wanted to do, but financially, they may have been making a couple of grand a month doing whatever they were doing. Now they're making 4.
Yeah.
Yeah, the
Which,
incentive is definitely not there to go back to work for a lot of people.
yeah, quite the opposite actually, which is
Makes me
extremely
want to pay
weird.
my taxes.
Yeah,
And then they go out and they do everything on for cash. And they're
I
getting
think
the
in
4.
general with taxes, there's going to be a huge problem because now that they've stimulated, to an extreme, and they're trying to claim whenever they ask them, like, okay, isn't all this money printing going to have negative side effects? And of course, they claim that the answer is no. Then you make it extremely hard to give a proper answer to people that say, okay, so much money printing has no negative side effects. Okay, fine. Why can't you just print another 3-4 trillion that the government collects in taxes and just get rid of taxes altogether? And I mean, what can you answer that won't contradict your initial claim that all this money printing has no negative side effects? I mean,
Yeah.
if
Well,
what you claim is that no negative side effects, and in the contrary, it will help perhaps to stimulate the low inflation, which for some reason is a problem. Okay, stimulate a little bit more, and get people not to pay taxes.
I think the problem that central banks have put themselves in is that all these measures work, but in the very short term. You have to unwind, and that's what they're not doing for over the 10 years now.
There
right?
is no. I mean,
that's the
that
problem.
ship has sailed, Stelio. There is
Yeah,
no
I agree.
unwinding.
I agree.
I mean,
But
they even
that's what-
claim now that they won't unwind.
Yeah, they were selling us the story that we're going to unwind. Well, we didn't believe them then, and definitely don't believe them now. So this,
Yeah,
in
if
the
they
end, is
couldn't-
going to
if they
have a
couldn't do
bad
it-
result. Yeah.
Yeah, if they couldn't do it after 12 years of an expansion, I mean, when are they going to do it? Never.
Yeah, absolutely. I mean, market-wise, I was talking about equities before. It's a difficult one to time. I still think there's a leg lower coming, but it's very difficult, and I'm definitely not getting in front of this train. Also, in currencies, look at cable. Cable a month ago was at 128. It hit 128. Then it went down to 122.5. Now it's back to 126.5. This is like a 4% round trip, and there's not, obviously there are developments in the UK, and they're talking about the impending or not agreement with the EU. But still, these are big moves, and they're very choppy markets. They're getting, take people out on both sides, and this is not just cable. A lot of currencies just swing wildly from one side to the other, and there's not a big
direction.
Let's say
there's
driver.
No
Yeah, there's no direction. Like Blake was saying before, the only direction I'm seeing at the moment over the past few weeks is or months, let's say, is stocks going higher and metals going higher.
You're right.
I'm happy about that because I'm still long silver. I'm just riding that, and I'm still short Euro Norway, which is also risk on and doing okay. But I hold no equities in my portfolio, which is very annoying because I'm missing out on this run. On the other hand, I'm not short either, so at least I'm not losing money on it. But I want to get short, but I'm not doing it yet. I want to see some price action, some price development, and then I don't mind missing. Just like in March, I don't mind missing the first 2, 3, 5% if it means I'm going to catch the next 10, 15 or whatever it is. So
yeah, you need to be careful though, because in these markets, as I was explaining yesterday, you get a slow grind higher, which might last for many, many, many days in a row. And then suddenly you get like a 3-day sell-off that can take you like 10% lower. So, it's not going to be easy to catching a move lower because it might be just, 3-4 days of a big sell-off. and then somebody's going to come out. They're going to promise, pushing more QE for a short period of time. The markets are going to go again in zero volatility mode temporarily, and then the slow grind higher is going to restart once again.
Yeah, I agree with that. It's difficult to time, like I said before. Anyway, it is what it is. Markets are very difficult, and that's why I'm keeping my sizes a lot smaller than I usually did. And I'm being very cautious, and that's what I.
Anything else that we had overnight before we jump to the charts, Stelio?
Well, again, I've been away from the screens quite a bit. But I don't see anything major news-wise. Mexican CPI printed a little bit better than expected, but who cares really? So I don't know. Unless anybody has anything else to point out, I don't see anything else data-wise that's worth noting.
Okay, still. So go enjoy the Aegean Sea.
Thank you, mate. Thank you.
And
Thank you,
send
everybody.
pictures.
Yes.
Bye-bye, mate.
Bye.
So Dale, any requests? Okay. Oh, he's away. I just noticed. Okay. So Stelios mentioned the cable, so we might as well start from there because yes, it is doing quite well. So he mentioned that one of the things we have is no real direction. Longer term, the cable still has direction, right? I mean, we still remain in this large channel, so theoretically speaking, we still remain in a downtrend. Now, clearly, the cable is trying to attack once again the 128 high, and I think there is a very decent chance that it's going to make it there. There is a divergence clearly today with what the euro is doing because the euro is barely up on the day. It was somewhat higher, a few hours ago, but it has already pared back most of its gains. The result being that euro pound is continuing lower after we had already mentioned that this was a pivot area after slicing through the 90 cents confluence of supports, because that was both previous resistance and these ascending channels, ascending trendline support. So we sliced through it, and for the time being, I think we should keep looking lower. Next real area of support I see is at 88.50. I think we will probably make it there. That is also the extension and the natural target of a little head and shoulders formation. You can see it clearly on the daily, but if we go to the 4-hour chart, it's not like the most beautiful one, but there you go. Here's the neckline, shoulder, head, shoulder, and that points to a retest of the 88.50 area. So I think that euro pound is a decent probability trade for continuing lower towards 88.50. Now, since we've said it many times, I mean, the market is going to be moving based mostly on what risk assets are doing. Risk assets and the dollar, since the whole COVID sell-off, are very strongly inversely correlated. So everything starts from what's happening with risk assets, and what's happening with risk assets is that they still remain well bid. I mean, there is a divergence. I mean, the Nasdaq is still hitting all-time highs almost on a daily basis, while the S&P is diverging, not only in the shorter term, in which case we can clearly see here that we haven't even managed to punch through the June high, but also in the longer term, because we still remain, decently away from the February all-time high. Oppositely than that, the Nasdaq is above the June high quite substantially, and substantially above the February high. So, we're still seeing this divergence, and I do think that there is a very good probability that we're going to see another leg lower before this divergence gets resolved. I mean, I do think that we're first going to see at some point a move lower, with the S&P still not having posted a higher high from the February high, at least. Now, there is a chance that we're going to see a higher high from the June high. Specifically, I'm looking at the 3260 area as an interesting confluence of resistances. In which case, of course, Nasdaq is going to be even higher than what it currently is. But I do think that we're going to see some type of a sell-off before this divergence gets resolved, and before we can see the S&P also push to all-time highs. Now, as long as there is no technical evidence that we're imminently reversing lower, there is no reason not to trust. And if you remember, we had this conversation yesterday. I spoke as usually after Blake, and I said that, listen, we might not have seen any follow through yet, but it's only been 1.5 days since we broke through this corrective channel in the DXY. So after 1.5 days, it's not that I can claim that I find momentum unimpressive and I'm not looking for more downside, because we can easily see continuation now, and it's still going to be on time to claim that this thing is moving. So that's exactly what happened. And even specifically, if you remember, I mentioned the USD CAD, saying that I do like it to the upside when the dollar moves higher, but from a risk reward perspective, it was exactly on the resistance. And if I had to do something, I would be selling it, against resistance, right? Because the risk reward was quite frankly amazing. And USD CAD actually was one of the biggest movers yesterday. I'm going to show it after I finish here with the DXY. So the DXY has produced follow through to this breakdown. And I don't really see any big reason why it can't at least retest the 94.65 previous low here. So, for the time being, and as long as the market is ignoring all the negative news having to do with the economic recovery, I don't really see any technical reason why you should be fighting this. Meaning, the path of least resistance is lower dollar, higher risk assets. Now, do I think that from a risk reward perspective, this is the place you should be buying risk assets and you should be selling the dollar? No, I think it will work most likely for a few days, yes. But from a risk reward perspective, if you're looking for a medium term trend, do I think that we're going to continue like for weeks and weeks before we see a deeper correction lower? No, I don't think so. So it depends on what kind of time frame you have in mind. You want to trade for a few days. I think that lower dollar and higher risk assets remains favorable. You want to trade for a few weeks. I think there is a decent chance that within the next few weeks we will have a deeper pullback in risk assets, and that will get the dollar bid. From a technical perspective, I suspect that it's very likely that this is going to happen with the DXY being below this recent low at 95.73. So I would assume that having to do with the dollar, we're probably going to see lower levels like this before we get that type of a rebound. Now, keep in mind that if you want something to monitor closely, to help you a little bit better by timing it, I think the VIX remains one of the most reliable indicators. And once again, we're seeing several days of divergences playing out here in the VIX. And, this usually works out fine after a few days to a week or so. It's important that the VIX is not only diverging having to do with the very short term, meaning the last 4 or 5 trading days, but it's also diverging based on the June high that we got. We got a lower low in that case. And I suspect here that even if the S&P pushes to 3260, with momentum having completely waned, I suspect there is a very good chance that the VIX is going to be diverging, having to do with its previous low. I think we're still probably going to be higher than that previous low, which is going to be another indication. I'm monitoring this as a triangle. I think that once we break through 30 in the VIX, I think that we're going to see another spike towards like 45 to 50, and it might be short-lived, having to do with time. But in a spike like this, you can easily get a couple of hundred handles. If we're talking about S&P, you can easily get a couple of hundred, perhaps even 300 handles to the downside in zero time, before they can step in the market and support it once again. I mean, we've seen the movie multiple times. We know exactly how it works. My eyes
What was
just
the
fell
high
on-
in the S&Ps back then, Steve, when the VIX was trading, in the low 20s?
at
Surpassed
25,
it
it
by
was
quite a bit.
32. Let me tell you the exact number. It was 32.
20.
33, something like that.
Okay.
32, 33. Yeah,
Okay, thank you, buddy.
my pleasure. So my eyes just fell on the last question, which is best time frame. There is no such a thing as a best time frame. I mean, probably that's not a question. That's not the answer you want to hear. And I'm suspecting from the question that you're an amateur, which there's nothing wrong with that. Nobody began as a professional, right? Depends on your trading style, and your trading style depends on your personality. So I know people that are extremely successful in scalping the markets. We have two of them in our group, Amanda and Polly. I know people that are very successful in trading long-term themes only. I know people that are somewhere in between. I'm in between. I'm a swing trader. I mean, my trades might last between, a few days and a few weeks. You have to find your personal edge, and that will tell you which time frame works best for you. I mean, what type of time frame you're more successful trading at. Nobody can answer that question for you. You need to experiment and see what works best for you. So let me go back through some of your questions, guys. Needless to say, I don't want to focus once again in gold, silver, and the rest, simply because nothing has really changed. Very, very briefly, confluence of resistances at 1824 at gold. Silver, next upside resistance is at 1920, already testing a resistance area here, this previous high. But keep in mind, and I've said it before, this is the best fundamental environment you can hope for monetary metals. In my opinion, don't try to fade them. It's not that they won't pull back on occasion, they will. But the easy money to be made here is higher, and it's going to remain higher. And keep in mind, I know that many of you haven't really experienced bull markets in gold, but this is what a bull market in gold looks like. This one, for example, that started in 1999 with gold at $250, and that actually lasted for 12 years with very minimum pullbacks, with a couple of exceptions. So trust me, with what we're currently seeing, if you think that it's impossible to see gold and silver having another like 10-year rally, you should think again. Now, having to do with crude, I can't really say that this looks like an ascending wedge because the inclination is extremely shallow. So, I mean, the formation I see here, in my opinion, has a much higher chance of breaking to the upside for one more push to the upside than reversing from here, in which case I would be looking for $42 and above that, the 61.8 at 44.80 as next upside resistances. But I still strongly believe that the easy move higher has already been completed, meaning I think that from a risk reward perspective, if you're not looking to make a quick buck, and you're looking to be committed, for a longer period of time, being long, I think you should first wait for a deeper pullback to have the opportunity to buy at a better price. So in the short term, might be a good trade, trading the breakout, from here towards 42 and 45. But I do think that the next big move to the upside is not going to be starting from here. It's probably going to be starting from lower. Something I forgot to mention yesterday, although I did mention it 2 days ago in the chat room, was that platinum has also broken out from what was more than obviously a corrective formation here. You can see it. Now, pay attention here because 875 is a key area of resistance. I said it the previous time we were testing it. I'm saying it again. So, what's 875? I would definitely not be buying platinum so close to 875. Now, on the other hand, if you see platinum just break through 875 like it's not there, I think you can expect it to extend higher and probably gain momentum on the way. So buying a breakout from 875 is probably a good idea, but don't buy it like, just $8 away from 875. That's what I'm trying to say. Now let me go through some of your questions. Copper at January highs. Yes, copper is definitely unstoppable. I mean, the way it has been moving higher is not convincing, but nevertheless, it's not stopping. Having said that, you should really pay attention because once again, we're testing these ascending channels, trend line resistance. So I think that at the very least, we should see a short-term fade from anywhere between here and $2.9. So in the short term, I don't think you want to be long copper, not until we see another pullback at the very least towards $2.7. Okay. WTI, yeah, we already covered that. Safer to short dollar against pound. Definitely the pound against the dollar is doing quite well at the moment. There's no question about it. Question about the pound Aussie and the pound Kiwi. Absolutely. Let's have a look at them. Here's the pound Aussie. There it is. So I have to tell you, quite constructive, right? I mean, quite a steep descending channel. First indication that something is changing here, it was the breakout from this channel. Second indication was a very, very clear loss of downside momentum. Third indication, I haven't marked it because it was so obvious, but nevertheless, let's do it now, was a very clear RSI divergence, which just shows you what your eyes can tell you anyhow, right? Here it is. And third indication, the breakout from this descending wedge. I think we're currently testing resistance here at 180, 150. And needless to say, if it happens that we see some risk off imminently, that's going to help a lot these type of pairs recover. So the only thing that's missing from this mix to make pound Aussie and pound Kiwi explode higher, by the way, here's pound Kiwi, not yet breaking out, but clearly one step behind pound Aussie, meaning it's already displaying the loss of momentum, it's already displaying the RSI divergence, but it hasn't yet delivered on breaking out from an equivalent formation. So what's missing is risk off. Keep in mind that these currency pairs, with some risk off coming through the markets, can literally fly 500 pips, 1,000 pips to the upside within 2 days. I'm not exaggerating. I've seen many times in my trading career these pairs, move 1,000 pips within 2-3 days. So they tend to grind lower but explode higher. So keep that in mind.
Natural gas. Gas.
We ran out of gas, I understand.
Take your Pepto-Bismol because we're going to be talking about natural gas.
Okay. The only
with
thing I
Brent
have to say about
Kelly.
natural gas is that it remains trapped in this 1.5 to $2 range. I would very much love to buy a breakout above 205. Until that happens, I'm not doing anything with it. But I do favor an eventual break higher from 205, in which case I do think that natural gas can really extend higher in very little time.
Yeah, well, Brent Kelly's with us, and that's her
Perfect.
bailiwick.
Perfect. I'm looking forward to listening what she
To
has to
Brent,
say.
she's one of the best in the energy complex.
Sorry for not making it to cover all the questions, but you know how it is. I mean, this is the time we have. Those of you that are in the chat room, feel free to, ask anything we didn't cover. And, that's one of the good things in being members of Forex Analytics. Not only you get
Yeah.
analysis on 30 different markets, not only you get patterns in play and notifications on your mobile and everything else, but you also have access to, what we think almost all day long. So thank you, Dale. Enjoy the interview.
Okay, thank you, Steve. You do the best rundown of the whole board of anyone I've ever met in my career. And I've been doing this about 200 years, so
Thank you.
that should say something. Okay, Bryn, I've promoted you to panelist. I'm going to ask you to unmute. Why isn't it let me do that? Okay. Can you unmute, Bryn? There you go.
Let's see, did that work?
Yeah. Welcome
Okay.
back to Face, Bryn.
Well, thanks.
It's great to have you here. People have been asking about natural gas, for, I don't know, it's been cheap for so long and base building for so long. Have you used Zoom before?
I have, let's see, you want me to,
Share
are
your
you,
screen,
oh, I see, okay.
the green box here.
Let's see.
And I went to your website earlier, very nice site. And here we go. So you're one of the best at fundamental analysis when it comes to the whole energy complex, crude, natural gas, all of it. So tell us what the calendar is telling you in WTI with all these different colored lines. I think that I can't interpret it without your expertise. Tell us what it is.
Well, first of all, yes, it's good to be back, and
Okay.
Hello, good to talk to you again.
Hi, Brent.
I always find it funny when I'm on your show, only because I feel like I'm a bit of an anomaly. I look at things so differently. So I was, I think it's a different way to look at things, and if it's helpful, great. But I understand that people like their charts and their technicals, and everybody has a different method, right? And this is just me kind of unpacking my brain on how I come at the market, and I think it's just a little, maybe not the same as
well,
the way
sure.
You guys are all looking at it, but so
well, I've seen you make some prescient forecasts over the years, Bryn, and there's many ways to skin a cat, and
exactly.
Some people ignore fundamentals because they think everything's in a chart. I'm kind of in the camp where it's great if you could master both, but don't ignore one or the other.
Agree. I think it's, one is probably what you lean on, and the other is, your supportive, entry exit points or whatever.
Right.
But whatever it is that gives you conviction is what, you should use. And I build my conviction in a broader way. I think we've talked before, but the way I grew up in these markets was really looking at relative value and trying to kind of build my trade ideas around that. And so that's, a lot of why I have some of these, different charts that aren't necessarily live per se, but, I'm not trying to catch a move within 5 minutes or 2 ticks or something like that, right? I'm trying to catch a trend or anticipate a trend. So I do a lot of I every single morning, right? I am pulling the data, and trying to see where the anomaly is and what might be the leader, what isn't the leader, right? And
Yes.
back into everything that way. So I have some natural gas stuff. I have some oil stuff, some inventory stuff today, and we can talk. Dale, and you just tell me when we're running out of time.
Okay.
So yeah, the first thing I like to look at is I like to get a sense of, what the complex looks like, right? So for me, the complex is, the 12-month calendar strips, right? So calendar 21, calendar 22, like how are they seating, against each other? And it gives you kind of a sense of, the relative bear bull pull, or, you can say to yourself, does it line up? And these are the calendar strips in WTI, just regular WTI, the crude contract. And obviously for Cal 20, we just have sort of the balance of the year, and that's the green line. And it was really the story until March that we'd had OPEC cuts that had started, I think in 2017, was around 1.5 million or 2 million barrels that had continued to be rolled forward. And in that way, the curve was backwardated because the anticipation of these cuts rolling off, the expectation was that then will be less tight in the future, right? So, they're restricting supply now, and as soon as those cuts roll off, so there was no hope for the back of the market. And as a result, we sat in backwardation, right? Where the green line, the front right, is over the back. And as we kind of got closer to
premium is in the front month, and
that's right,
compared to the back.
Mm-hmm.
Okay. I do have to ask you one question on history.
Yeah.
What was going on in your head when you saw crude trade negative $38?
I mean, not a lot. Look, I've traded natural gas for years, and natural gas is a real regional market, and it has all of these basis locations. The Permian, the Marcellus Shale, East Coast, West Coast, and those have traded negative. We saw -7, -10. So it's nothing other than a reflection of a constriction in logistics, right?
Okay.
So the reason Permian natural gas traded, -7, and I think it was sometime last year. There have been several times when it has, and it was merely a function of they had more production in region than they had pipeline capacity to get it out.
Okay.
And all the market ever is trying to do then is value an excess or a scarcity. Just like we've seen natural gas on the East Coast, in the Northeast, in the winter go to $200 while Henry Hub is at $4. It's just the market's mechanism for pricing scarce pipeline capacity to get to the system, right? And if that's what it uses to price it. So for me, to see it go negative,
it's no big deal.
Well, I mean, it was obviously, a historical event, but I guess, it was when you completely pull the rug out from under a market and completely change the game, as in refiners were backing down, cutting down production, so less crude running into the system, in a scramble, in a really short period of time. It's hard to get the logistics to work out, right? All of a sudden, people who are sending barrels somewhere had to find a different home for it, and people were worried about whether they were solvent or what was happening. There was a lot going on, and so in that way, the market just prices that inability to react.
That's a key word. There were fears of solvency, and that's why the Fed did what it did. So
That, right.
that
And
word.
also, if you're just someone, a producer that was sitting there, every day you put your barrels on the pipeline and, shipped them off. And in a nanosecond, that kind of whole construct changed. People don't have contracts in place to move it somewhere else and to store it
Right.
somewhere else, or, they've already produced it. It's on its way. It was just it's not.
Aberration. It was an
Like
aberration.
Yeah, when you're dealing with physical barrels, you can't just, it takes a hot minute to sort it out.
You can't just click your mouse and
Yeah,
you're
you
out.
got to call someone and you got to arrange, okay, maybe I can get a rail car guy, it can't happen as quickly as, and the market showed us that, right? That there was not enough people prepared to react to that, and so that's it. I don't,
Okay.
look at it as anything. I mean, it was crazy. It was interesting. It made for great, headlines and whatever, but you can see, what happens now. These are the calendar strips, right? So you're not going to see the negative pricing on
Right.
here,
Mhm.
but you can see, this huge dip, and, now the market is kind of sorted itself out in a way, right? We got some production cuts. We got, people, the system has kind of figured out, all right, we can move it over here. The U.S. leased out some of its strategic petroleum reserve space so that, and contracted with some of the oil companies. And so now they can move their barrels there. They're just, some things have gotten into place that now, are bringing some stability, let's say, into the market.
Okay.
Versus,
And that's definitely what we have here. And in fact, I think a lot of people were surprised how much stability in many different asset classes has occurred since the lows in late March. Do you feel like there could be another hiccup, COVID related, or that is something that we've seen once? Has it affected demand? Could it affect demand? Do you factor that into? It's kind of a new factor. The last time you've had to factor in a pandemic, you and I weren't trading yet, right? So do you factor that in at all as far as demand, global demand, et cetera, Brent, on
well,
what's
look,
happening
it
with?
is let's just, if you were to picture a model and you had a bunch of inputs, for that model, right?
Right.
And you had supply, production, demand, all growth, spreads, global movement. It's hasn't been the case for a long time that almost every one of those inputs is in serious doubt, right? You can make some educated predictions like, okay, we've seen this much demand come back, and this is how, what it should look like if people start driving more, or if, we start flying planes again, right? So you can make cases for that.
A lot of ifs now that you've never had to deal with.
Yeah, and so
in our lifetime.
I'd say all markets, all people
Yeah.
are feeling like this move it's hard to hang your hat on, the continuation of these trends, only because you don't know. There's still a lot of factors that could completely go differently than expected. So, and in that way, there's a lot of angst, right? It's like, it doesn't sort of feel right that the market's here, but, the market's kind of reflecting just the conditions right now, right? And
Right.
let's say in oil, right? We, OPEC got their production, their cuts, the US says everybody is kind of, cut back some production. Refiners aren't running as much. So you kind of have, well, what's left in the system, right? So if you're
Yes.
running your refiners at 70% capacity, so you're only producing X amount of gasoline and you're only producing X amount of oil, how do you, incent that amount that needs to operate right now, right? I mean, we all still need gasoline. We don't need as much, but we need it. So, spreads are and prices are, saying, all right, well, of what is left, we have a smaller available supply that, that kind of came to match smaller demand. But, and maybe this is how tight that is now, right? $40 tight for all that.
Right.
But
are you seeing more demand for gasoline because people feel safer driving than flying?
Gasoline is the summer driving season is really the main time for gasoline. And let's see if we can go down and see that here. I might not have it. Oh, I don't. So the way that, natural gas production gasoline is, you produce a lot in the winter to store up, get ready for the summer. We massively draw down inventories every summer and then start building them back up again in the winter. And we had started doing that, in March, beginning of March,
Right.
April, we were kind of at high levels, but we had already started dropping, reducing those inventories seasonally as usual. People were actually fairly long gasoline,
Yeah.
And then all of a sudden, we just took demand right out of it. So the problem now is if we miss that summer driving season, because there's already a seasonal decline in demand in the fall and winter, can you really shift that forward? Like, is that whole pent up amount of demand shifting forward for, and that will still happen or not?
Yeah.
And it's looking,
What's it looking like? Are people
a little less likely, right? That we might be shifting that, like, I think there was a huge expectation of recovery of gasoline demand in the fourth quarter. And it seems like that's a little bit less the case, a lot of schools maybe not going back, there's a lot of, believe it or not, a lot of gasoline demand comes from driving kids around to sports activities and
Wow.
various things. And that is not looking too good.
Right.
It
Yeah.
seems like you won't go back to carting your kids all around for soccer games and football practice, whatever. And there's a lot of demand in that, actually.
Surprising to me, but
Less and actually commuting to work is a lower percentage of gas demand, because that's just, you drive to one place and you're done, right? And then you drive home, versus driving around all day running errands, for example.
right.
And
If you have a family, you're in a way an Uber driver.
yeah, right.
Okay.
I don't have kids, but
But
I know people.
you don't
do
get
that.
paid. You
Exactly.
All right.
So the dynamics. So people are concerned about that and what that looks like. Yet right now, we're it is summer and people are trying to get out a little bit more, and in a sense, everything's kind of rebounded a little bit to price that in. And again, you can see that in this chart. The main thing, to point out here is that the market had been in backwardation for quite a while. And that was really the trade. If you look at, these are 1 month calendar spreads, right? So SEPOC, OCC, Novi, Novi-DEES in WTI. And
Yeah.
for at least the last year, if not more, the play, trades that I would do, trades that, the market looks at, is when, these spreads kind of were in a range, right? They move high to low, and especially like the first 6 month spreads. And when they dipped off, they were always a buy. No one was thinking they were going to, flip in negative.
Right.
And that's because really the expectation was that as long as these supply cuts are here, and, I'm talking pre-COVID, they're going to expire at some point, right? So the front is always going to be stronger right now than, we'd spent the years since 2016 working off an enormous amount of excess inventory. These cuts help do that. The market, kind of reached some normalcy. And so you really were buying and selling, it was active. There was, you just kind of got into them at levels and they, bounce up and down intraday. And, here you could see at the end of the year, they were kind of catching a trend. And, all the spreads were going bid regardless of, what price did. Right. And then, wham, the entire structure changed. Right. And we were in severe contango, right? The pink line on here is the front month spread, right? And
Right.
where it's on the top, right? It flips all the way down here, and they, they really got disconnected. At times they're all bunched together, right? Maybe it's 20 cents a month or something, for each spread. And then maybe the front spread, right, gets a little wider. And we had this huge sell-off. And
has it ever gone negative 150 before, Bryn?
Pardon me?
Has it ever gone to negative 150 before, like it did in May?
Yeah.
Okay.
Yeah.
So it's not just a, pandemic scenario that could drive the spreads to negative $1.50. What would have been a situation without COVID that could drive the spread to negative 150?
So an unexpected large amount of refinery outages like Harvey, right?
Okay.
Where
hurricanes,
all the refiners suddenly are down. So, the crew doesn't have anywhere to go.
Mother Nature mainly, huh?
Pardon me?
Mother Nature events,
exactly.
Natural events. Okay.
Yeah. And in that way, it goes, incredibly, way more positive too. Like when we had the Saudi drone strike, right? So they're either, supply shocks or demand shocks. Demand shocks usually seem to be like, weather related, right? The first kind of one was a different type of demand shock than we've had.
Right.
But in that way, they are short-lived when they're weather related, right? And this one is obviously could exist for quite a while. And now we also have the dynamic, though, in the market that, OPEC plus cuts, they had a schedule, right? They were cutting 10 million barrels through the end of like this month, and then it ratchets down to 8 or 7. And then by the end of the year, it's down to 5, and then all the way through 2021. So there is this potential supply out there. And in that way, the spreads sort of recovered, right? And now they're really trying to determine, can we move into backwardation? Because in the future, we know all of these cuts will roll off and there will be a lot of inventory overhang to contend with. And, and so the front, could lead again here, or is it just so weak overall? And in that way, there's, I think everybody is, these front spreads are sort of hanging around 10 to 20 cents negative.
Yeah.
And we've been trading kind of in and out of that range, but there's not a lot of comfort yet that's developed in that is, I can always sell minus 10s and buy minus 20s. Is there something that could, flip the front over here? And
because it looks like a rally back to, what used to be major support levels. And now we're right back there. We've recovered. And now this is where the rubber meets the road to see if we could start to go positive or maybe even pull back bigger negative from here. Is that the way it seems to you fundamentally?
Yeah, it would. It's harder to imagine a huge. It's hard a further, like a.
We're not shutting
decline.
Down again. The globe's
like
not, right.
I don't know that. I mean, sure, we could envision lesser demand for a longer time, but lower demand is not the same as an initial shock.
Yeah, shutting down the whole world and people staying inside for 90 days. Yeah.
and people, having to scramble and cut back. I mean, when these spreads sold off, we hadn't, production cuts hadn't hit the market yet, right? They didn't start till June. I think June, July was the first. It could be May, but I thought the production cuts started in June. So in that way, right, as soon as they took hold in the cash market, right, and that production was pulled off, then the spreads got tighter.
Right.
And so now all eyes are on whether, how next month, if they bring production up 2 million barrels more, is that going to put a little more pressure on the front? But in that way, then it should put more pressure on the back, right? Because they're going to be even, reducing the cuts more going forward. So this is really interesting right here, these levels, right? And trying to figure out.
It's like at a show me level here now,
Exactly.
Right.
I would say people are, there is a short-term scenario under which refineries ramp up a little bit more. And so within like the month or the front month, crude feels tighter because, we've taken supply off the market, but now refiners are pulling more into their system and it feels a little tighter. So you could picture that maybe the front couple months could go over. And I think, that's why we've sort of seen this recovery here, right? It's let's watch these refiners, the utilization rate, every week in the inventory report, that's one of the numbers. And it's been steadily, I think the low was like 60% and, I think it was 77% last week. So, but it's a, typical tough balancing act. They ramp up a little bit to produce a little more gasoline, but if the market's not ready to accept that amount of gasoline, right, then all we end up doing is building gasoline inventory.
Okay.
So
someone says they really like your urban gardening experiment. You have a green thumb, not just a.
Am I taking crap for that?
All right. Anyway, can we switch gears to nat gas? A lot of people, but go ahead.
Yep. Okay. Let's see here. All right.
A lot of people looking for a bottom here.
Yeah, I know.
Forever.
Well, let me just say this about natural gas before we look at the curves. Natural gas is a show me market. It is a last minute, won't move until the cash market itself gets tight. Big reason for that is there's not very much money flow in the gas markets. I mean, not nearly as there is in oil. I mean, natural gas, yes, we have some LNG that we export, and that's a little nice new dynamic. But for the most part, it is a market where all summer long, we produce more than we need. And in the winter, we consume more than we produce on a daily basis, right? So storage balances those two out. Okay. And year after year, you can sit there and look at storage and say, oh, storage is too low. I can't believe prices are higher. Or storage is so high. I can't believe prices are lower. The market doesn't care until it cares. So looking for, timing and patience of waiting through these summer months. And I think people get a little bit of feedback loop, like, oh, one day there was a weather report and we moved up a little bit from like $1.60 to $1.70 or something. And oh, now I'm validated. The weather was the mover, right? But then the next day it doesn't.
Right.
And so, it's hard to get price signals in the summer, and summer gas isn't winter gas. It's, you're not going to hold your August you got to roll forward, and the spreads are really wide. So picking a bottom, I think we're 100% up to Mother Nature on natural gas. Okay. Odds are, our storage levels are higher than we've been. And so having 4 TCF in the ground coming into a winter, it really doesn't matter how cold it is. Sure, you'll have days where the market spikes, because if it's cold in the Northeast, and the demand exceeds the incoming pipeline capacity, these will blow out.
Right.
The only wild card that's a little different this year is that there is some expectation that, usually what supplies, I'm so long-winded, what supplies the market on any given day in the winter is daily production capacity. So, there's, only so much can flow on pipelines, right? So that's X plus the daily amount you can pull out of storage. So X plus Y is how much you have available on any given day.
Okay.
And there is some speculation and projections out there that the daily production is going to be impacted by this, low prices, by crude oil production being taken offline, which therefore pulls associated natural gas production offline. So even though if you want to look at storage and say it's going to be really high, I don't know how it is I could get bullish. People are getting bullish in that winter condition because they think that the daily production could be hindered, right? So the X in the X plus Y is just going to be lower than we've seen in the past.
And hindered why? Because crude's going offline?
Well, so I'll say two main reasons. One is in the Permian, if you lower your crude oil production, by default, you have less natural gas production. Because if you pull out a barrel, of oil, you get like 30%, natural gas. So if you stop producing, so they're in that way. But there is so much excess in the Permian already. They flare a lot, and so in that way, there's that. Also, so then you go to the Marcellus, which is really, they're not drilling for oil, right? Their purpose there is they're drilling wet gas, right? They're trying to get natural gas and all the natural gas liquids. And since natural gas prices have been so low, they've really been making their money selling the gas liquids. So the ethane, propane, butane, the NGLs.
Okay.
And those prices track oil. And I'll show here, I think I have. Here is kind of the NGLs in dollars per MMBTU. And they, obviously have come way off. You think about just before March, right? We had the NGLs kind of up here in the $10 per MMBTU range, right? Except for ethane.
Right.
And then you got natural gas down here, right? So you can see if you're a Marcellus wet gas producer, this is, the blue line, which is natural gas, has just been the same, right? But you've been getting your little extra kicker,
from the products, right?
For selling these, liquids.
Right.
And in that way, could be forcing some economic shut-ins. And that's really where it needs to come from, right?
That was their profit center that's been taken away. Their major profit center.
That's
when you say, okay. What a great interview, Bryn. You're always so great. And I looked at your website and I've had you here before. I don't think you've ever shown it. So I know that people could get a hold of you and follow you.
My fundamentalangle.com. Yep.
Yeah. At Bryn
I also
Kelly.
do a blog every month, every week at Cornerstone Futures. So it's Cornerstone globalcommodities.com, and you go to research, and every week I have all these charts and a whole write-up about oil and the markets. So yeah.
Well, Bryn, thank you so much for coming here. My hope is, you and your family and people care about stay safe, and thank you for the great work that you do to give us technical traders a background that we normally wouldn't have without going to experts like you about really the intricacies of what happens in the energy complex that's way above a candlestick or a bar.
Right. Well, and vice versa. I like, sometimes there's an inexplicable thing going on, and I turn to, the
Well, yeah.
technicals, and it makes sense. So yeah, great
And-
to be on again. Thanks for
Yeah,
having me.
thank you so much. My trading warrior sister, Bryn Kelly. Follow her if you're an energy trader or you have an interest in it, whether it's shares or futures or CFDs. And I guarantee you that she's a great source of fundamental information in the energy complex. And I'm rooting for you. I'm a fan, Bryn.
Ditto. Have a great one.
All right. That's a wrap, everyone. Remember, don't just count your pips, count your blessings. And we'll see everyone to wrap up the week tomorrow. Adios.